We are going to begin in a while. The session partner for this session is Barclays. All right, the topic for this session, sustaining entrepreneurship. As tailwinds become headwinds, how should startups manage expectations? Please join me in welcoming our esteemed group of panelists. Founder, Oyo Rooms, Mr. Ritesh Agarwal. Mr. Kamaljeet Singh, founder and managing partner, Fireside Ventures. Can we have a round of applause for all of them, please, ladies and gentlemen? Mr. Sanjeev Bikhchandani ji, founder, InfoEdge, and the moderator, Shruti Mishra ji, CNBC TV 18. Can we have a round of applause for all of them, please? Welcome, ladies and gentlemen. Over to you, ma'am.
Thank you so much. Good afternoon, everyone. And as tailwinds become headwinds, how should startups manage expectations? That's what we are going to discuss. Welcome to this panel where we discuss sustaining entrepreneurship. Panelists, many thanks for joining us here. Let me start with you, Sanjeev, quickly. India is home to more than 100 unicorns with a similar number waiting to join the club. In fact, funding, as we all know, we are all talking about the funding winter. It has slowed down. VCs, angel investors, private equity players have all shifted their focus from, beyond valuations to generating strong cash flows, really strong fundamentals. I want to know what conversations you're having with your portfolio companies right now. Has anything changed?
No, the conversations we have and we are having have never changed. Because we have always said the same thing. For a while, it looked like we were saying the wrong thing. But now it looks like we were always saying the right thing. And we've always said, when every round, we would say, assume this is your last round, market may correct. If you don't get next round, what's your plan B? Can you get to profit? And we have always maintained that the customer's money is better than the investor's money. Because if you're getting the customer's money and you're getting it at a price that's higher than your cost, chances are you have a viable business so long as you can get enough customers, right? And if you're getting the customer's money, then the investor's money will almost certainly follow should you need it and want it. Right? Because investors love to invest behind businesses that are getting customers. Right? On the other hand, if you get the investor's money first, it is not necessary that the customer's money will follow. Because the customer is very discerning. The customer will only buy you a second time if it worked for him the first time. Right? And whereas getting the investor's money, is often about impressing two young MBAs across the table with your PowerPoint. And, if you're getting investors' money, it may just be a PowerPoint working, but you're getting the customer's money, your product and your business model is working. Yeah? So that's what we always said, and we maintain that.
And you've always been a strong believer in the power of the balance sheet. Kanwaljit, let me come to you. I want to ask you, what is the survival guide for founders today? Today is a world of stronger scrutiny, greater accountability. So is resilience and value creation the answer to tough times? Again, what conversations are you having with your portfolio companies?
So, interestingly, I have been an investor for the last 20 years. And I have seen from the euphoric, mid-2010s,
Yes.
all the way to now and so on. I would say that what Sanjeev mentioned, if I can elaborate a little bit on that, we have always believed that the space of investing is exactly about helping a company achieve a certain platform, which then has to self-sustain. And exactly on the consumer, funding your business rather than investors funding your business is the only key to sustainability. You cannot build a business just by raising more and more and more money. So obviously, each business has its own benchmarks. What we have been doing at Fireside is actually a completely new focus on consumer brands. So we believe digital brands are disrupting the entire ecosystem. And they're the foundations of what you do, coming from backgrounds like Levers and Procter, buying the first sale is the easiest job.
Yes.
Getting a consumer to buy you again and love your brand and love your product is the toughest. And as long as you understand that mantra, everything else then follows a pattern. So, putting the foundations right, what is your strategy? What is your customer repeat rates? What is your customer acquisition? None of this is new. None of this is something that, we are suddenly discovering.
But perhaps it was forgotten?
I don't think it was forgotten.
Okay.
I think, sometimes if I can be very candid, I have seen this now long enough with enough gray hair to say it's also something which investors are in a way, imposing on the system to some extent, because there is a certain time frame within which, all of us raise funds. We have a life of the funds. Sometimes the need to grow fast, not just in value but valuation, can also become more an imperative from an investor's push, and not always the founders, first port of call or first desire to do it. So, I mean, of course, we have veterans like Ritesh and Sanjeev sitting here. I'm sure this will be a interesting discussion. But I have always believed that if you give the founders the right amount of money with the right amount of guidance, not direction, I think they can build some very strong foundations and build long-term sustainable businesses. I think that's the most important thing that we are telling our people. Nothing new, but simply saying, think of it as a long-term thing. Even if, your horizon for even as a founder is that at some point you want to exit, you want to do something else, the business should not necessarily come to an end at that point of time. So that's really the most important thing, and then everything follows out of that.
Absolutely. So look at building long-lasting companies, customer trust, everything else follows. And as Sanjeev said, customer money is more important in the long run than investor money. Ritesh, coming to you now, as someone who's seen multiple ups and down cycles at OYO, and not just in India, but globally, what is your advice to soonicorns that are now charting their growth journey in such uncertain times?
Yeah, first off, thank you for having me here. And of course, I'm glad that I'm with Sanjeev ji and Kawaljeet. So it's a tough one for me to add a lot of commentary on. I think I'd say three things. First is to the point that both Sanjeev ji and Kawaljeet said, that is, if consumer money is coming, investor capital will most certainly follow. The question is, what's the price, what's the deal? That's a different story, but capital will be available for companies that are getting consumer capital. There is no question about it. And you mentioned about ups and downs. 2 years back, we had hundreds of thousands of rooms, but not enough customers there.
Yes.
Now we have customers, but we don't have enough rooms. So it just tells you that nothing is permanent in this world. 2 years back, people were saying, will travel ever come back? Now people are complaining that the room rates are so high. So I feel that, if you keep at it, which is what I was coming to as a first attribute, resilience in my view is the single biggest attribute.
Okay.
If I am a soonicorn, because until your customers' money keeps coming, as was being mentioned, and you keep at it, there is always light at the end of the tunnel. I'd say the second is solving for the depth of India. A lot of companies solve for the 50 crore or 100 crore or 200 crore revenue markets. But if you really want to raise capital and hence return capital as well, going after the big TAM, not just serving Gurgaon, but probably serving Gorakhpur as well, is valuable. And I'd say the last is that, and this is something that we've of course learned over the years, the power of good governance doesn't come 2 or 3 years before the IPO. It could probably start when you're even at a Series A stage.
Absolutely, yes.
A good governance would mean, instead of waiting for just having investor directors, can you potentially have a sizable number of independent directors? Is there an opportunity to make sure that the financials are reviewed every couple of quarters instead of just once a year, including the balance sheet, not just the P&L and things like that? So I'd just say three things. If I'm a soonicorn, I'd be resilient.
Okay.
I would go after a big market, and I'd make sure that I try to be as well governed as possible, but not to say this is the best list. This is what at least we've learned over the years, but I'm sure every company will.
Very, very well summarized, and building for Bharat, clearly that's where the next leg of growth is going to come from. Kaval, coming back to something that you mentioned about building lasting businesses. Clearly there is immense potential. We've got interesting ideas. Now the ecosystem is favorable. We've got so many VCs, which we didn't have a decade back perhaps. But what's holding back? We're not quite there. Building long-lasting companies.
See, it's honestly getting the frameworks right. And I think this last year or so has been a extremely positive, in some ways, wake-up call for everyone, that you can't take anything for granted. Like Ritesh said,
yes.
Things are going up and down. So you can't just assume that, life is on a high and it'll continue to be on a high. So to me, it is going back to fundamentals. If you can get your foundations right, if you can get the basics right, and that basics honestly are not rocket science. The other thing which I personally feel, and I mentioned to you before this panel, that I have a contrarian view. I personally, genuinely believe that this whole race to unicorn is a complete waste of time.
Yeah.
If
And
you-
now decacorn also. We've got decacorn also.
Any con. I think if you can get today if you see the sustained companies which have been around for 15, 20 years, I mean, take Naukri.com itself, but I'm saying look at the companies like Marico, look at the
Yeah.
companies like Wipro. I mean, they have built tremendous value, which has been ahead of any benchmark you would take in the industry. But they got their basics right. They got the foundations in place. So why does that not apply to the venture investing world? And honestly, one of the, again, contrarian view is you raise so much money in the race for becoming a unicorn that it dilutes the entire cap table, including the founders, to a level when the only option left for you is to continue to chase growth and valuation again and again and again. Because I have seen cases where, let's take one of our companies, Mamaearth.
Yeah.
It's a unicorn. So we are proud of the fact it's a unicorn, but the founders own over 30%. So it didn't matter whether it was a unicorn or not. We have created wealth for the founder and for the investors.
Yes.
So to me, if you can take away that label of a unicorn, there are hundreds and thousands of companies which can be successfully built with limited capital, doing the basics right, and actually change the way investing is considered in the country, rather than saying, I need that one unicorn to be a successful fund. I don't even think that is required. So,
Yeah.
I mean, contrarian, but I think that's a very
Sure.
alternate view of how you think about it.
Sanjeev, your thoughts on what Kaval just said, and what is that magic pill that soonicorns need? I know he said, don't believe in soonicorns, unicorns, decacorn, whatever, but what is that magic pill that needs to be there that perhaps startups need to understand and take?
Paisa banao, paisa kamao. Okay. Now, look, you need good unit economics. You need to have a clear path to profit or be profitable. So, and you need to be capital efficient. I think what happened in the last decade, since the global financial crisis in 2008-9, when there was so much liquidity, post-COVID again, there was so much liquidity, that valuation has shot up. So the number of unicorns that we have would have been half if this liquidity did not exist, maybe 1/3. Right? This is all liquidity driven. What you need is to actually have customers, revenue, margin, profit, collection, cash flow, right? All the things that you used to focus on till money was abundant. And when money was abundant, it became a competitive race to raise more and more, and to pump up your valuation, and then talk about valuation rather than revenue. It'll revert to mean now. So, can you guess how much money Google ever raised before its IPO? I think it was $25 million. So this entire market cap was built on $25 million.
Imagine, yeah.
On a much smaller scale, Naukri raised $1.7 million in April 2000.
Yes.
$1.7 million then was 7.3 crores, which is less than $1 million now, right? We used up only $1.2 million and we became profitable. And we have been profitable ever since,
Yes.
right? So,
But
good
what
companies.
made you? What made you? You had the money at that point in time to spend clearly, but you chose to keep that. You could have, we see startups and businesses spending on marketing and
We knew the value of money, right? We also knew that, look, we'd got a bubble valuation. And we'll never get this valuation again, we'll never get this money again. So, जो कुछ भी करना है, इसी पैसे में करना है. You will not get a second round. We were clear about that, right? And so we had to cut our coat according to our cloth. And and really this schooling and discipline and fiscal discipline came from the fact that for 10 years, I had bootstrapped as an entrepreneur. And in those 10 years, for roughly 6 years, I could not take a salary from the company. It could not afford to pay me.
we don't see this today. Yeah.
Well, you may see it going forward. I don't know.
Okay.
But look, I mean, the funding environment has changed. There is much more money available even now. What people call a funding winter is a funding winter for some, but not for others. So there's enough money. It's just that investors are perhaps asking different questions now and a little bit more discerning. But paisa to hai.
So, like he said, paisa banao, paisa badao. Ritesh, talk to us about your laser focus on profitability, sharp unit economics at OYO and in general.
Yeah, look, I think as was mentioned earlier, in the last 10 years has seen a bunch of positives and few learnings, right? First off, as an entrepreneur, Sanjeev's an entrepreneur, Kaval's done, he set up his own fund. So as entrepreneurs, first off, our job KPI is to be an optimist.
Yes.
So I think at least, you should know that I'm a big believer that you will, it's a power of compounding, where for many years you will see that the momentum is not that quick until you see that the momentum has turned. I believe that that time is coming. I believe that at the end of this winter, you may not see, X unicorns number only. You will see X profitable unicorns also, which I feel will be the big positive coming out of the funding winter. Specifically for OYO, look, I think when COVID hit us, that was sort of a unique transformation opportunity, right? Because in one way, it could be seen as a problem. On the other side, it is an opportunity.
Yes.
So we try to, of course, as entrepreneurs, use that as an opportunity by doing three things. By focusing on cash, making sure that every dollar of cash is looked upon, not just in terms of everyday operation, as well as in terms of forward capital allocations. Second is cost, which is making sure that the break-even threshold of what revenue should we be break-even in, that was changed dramatically. And third is evolution. We focused in core markets of India and Southeast Asia. We said we'll go deep rather than going wide and so on. Our FY21 numbers are public, in which you will see that our EBITDA has improved by 10 points. Our contribution margin has gone from 5 to 18% and so on. But, I'm hopeful that very soon we will update results for this year's first quarter and we'll get the benefit of big travel growth that is coming out in the market.
Yes, I will come back to this a little later. Kamal, clearly, like we're discussing, the rules of the game have changed. The way consumers interact with brands today has changed. Where will be the biggest disruption and the growth opportunities emerge in the next decade? Where do you see them emerging?
So, I'll talk about our space, which is really consumer brands. And, India is at a very, very interesting, almost point in time in history where there is a huge consuming class which is demanding more choice. And India has always had a problem of too much of organized branded products because it was so difficult to build brands. So, you could not see enough entrepreneurial activity because going and selling to mom and pop stores all over the country was just not possible. So you have a situation where you are looking at disruption happening across the board in the branded space. And branded space, includes everything, anything you consume, food and beverages, personal care, lifestyle, home, etc., etc. So what we are seeing is at one level, the entire space of consumption is moving into more branded, which is really a great sign of an economy itself, becoming much more, demanding, much more developed, if I may use the word. Second is that the COVID 2 years has created huge awareness and huge consciousness about wellness, about health, about being more conscious about what you consume. So once again, you are creating a large space where, people are worried about, what they're putting. Back of panel has become, almost a way of life for a lot of people. And then, like you said, Bharat is the untapped market with same aspirations, with the ability to spend, and now with all the digital channels allowing you access. So we think that the opportunity is across the board. The question is, how do you design your business? And how do you design your business so that you can get to that proof point that Sanjeev talked about? You get very early evidence of consumer love, repeat, CACs, Amazon and Flipkart ratings. These are all great virtues to have as a brand. But then you have the vast network of going offline, omni-channel. I think we are still scratching the surface. So our whole view is that, we have seen 1,000 crore, 2,000 crore brands happen in India already. Companies like Boat, Mamaearth, etc., etc. But we will see hundreds of such brands coming up because the formula for that success is getting defined. And that is what is, really, really attractive as an investor. And you don't need to spend those millions and millions of dollars to reach that. So I think if we can follow that, playbook, then we are talking of a completely different, almost an alternate universe of investing, which at least we are very excited about.
Yeah, all right. Let's talk about IPOs and going public, which has been a large part of the startup ecosystem. Sanjeev, this is for you. While many lined up for a listing and for an IPO in 2022, the big one we've seen is delivery, and there's been a lot of downsizing of valuations. There's been a lot of postponement of IPO plans. For instance, we've seen PharmEasy. What do you make of this reluctance of tech startups to kind of, not go public? And when can we see this cloud lifting? And what are the other options available?
So for the ones that went public, which are trading below their listing price, their IPO offer price, I think you will have to fundamentally improve operating performance quarter on quarter to be able to get back some of those valuations, or the market has to come back, or both. Right? But we are seeing, at least in Zomato and even in Policybazaar, performance improve every quarter, and it was as per plan. Right? I cannot comment on the others because I don't know them that well. But fundamentally, I think the Indian market was willing to accept loss-making companies going public with some enthusiasm, maybe till a year ago. And since then, when the market corrected, the tech market corrected in the US and following that in India, that enthusiasm has waned a bit. And therefore, you may or may not get the same kind of valuations that those companies got. And with lower valuations, if you've taken private rounds that are higher than that valuation, it's a little tough to go public. So some companies are therefore in a bit of a quandary.
Okay. Kamal, similar question to you that, how do companies that are scaling up rapidly today, or perhaps soonicorns, how do they need to differently prepare for a listing today? Eventually every company wants to list. So now with this volatile environment, is there some kind of a different road or a map that needs to be drawn out for soonicorns and companies that are scaling up rapidly?
So let me answer that, and then I'll make a comment on what Sanjeev said. I think simple answer is get your house in order. There is no rocket science in defining what are the fundamentals of what you are doing, which will attract an investor, especially a retail investor in the market, because we forget that, these are all very good businesses. So it's not that anything is wrong with, these companies that went public. All of them are leaders in their own right. All of them have actually disrupted the markets in a very, very positive way. It's just that there are some fundamental things which need to be put in place. And again, everybody's got that little bit of time, and I would say a wake-up call to address that. So I personally feel that there is no funding winter. I don't think IPOs are certainly now stalled for life. But you have to get back to basics. In the context of this, let's talk of 3 companies which went IPO in the last 12 months, which have done phenomenally well. All in the consumer space. So I'm staying within the realm of consumer. Manyavar?
Yes.
I can't imagine how well they have done. And people say, oh, but they are profitable. I say it's not a shame to be profitable. It's not a shame that you are delivering great returns. You have campus shoes. You have Go Colors. So you are still seeing that the market, the street is still rewarding and actually over-gearing towards companies which have their fundamentals right. So I don't think this is something which is, something completely, shattering, or we have completely lost faith in.
So what went wrong? What went wrong for companies that did not work? Like you're saying, fundamentals, it's not rocket science. You need to get your house in order. So something has gone wrong somewhere. What went wrong?
My view, I think we used private equity yardsticks of valuing and defining businesses for public markets. And I think there is a difference between the two. The maturity of the public markets, say in the US and some of the more matured areas, it needs to also start understanding. And some of the benchmarks are not always comparable. So, the unit economics that we talk about, in many businesses, India is still an emerging market. The average cost of product, delivery, all of that you can't simply say that it worked in US or China and it will work in India. But it is a correctable problem, and it's correctable in relatively reasonable period of time.
Sure. Ritesh, I can't help but ask you about the OYO IPO plan. You kind of hinted at it. I just wanted to know, will OYO have a blockbuster Diwali?
So I think I knew this question was coming, but not to this specificity. Look,
I
think,
just said we wish you a very happy Diwali.
yes, yes. No, look, I think first off, I think clearly, Oyo has, we've waited it out to go
Yes.
public, and I think the reason for that is no different from what we just discussed about currently listed companies. It is, maturity of operating performance to show it consistently over a period of time. Early this year, what we started seeing is that travel started coming back very, very strong, right? Like I'm sure a lot of you traveled during the summer season or are planning during the winter. Just last Saturday, it was not, or last week, it was not a season or school holiday or anything, but we just recorded the second biggest day ever since COVID.
Oh, wow.
It just shows that people's traveling patterns is changing quite quickly, and we wanted to take advantage of it. So in short, the update from our side for a public offering is that we reached out to the regulator to allow us 2 quarters or the H1 financials to be updated for this fiscal, which is until September. And our hope will be to deliver great performance that everybody likes, and hopefully at some point of time go public after that.
Okay, and
So
we.
I will answer
Yes.
that. I will answer the question you asked him
Sure.
in a shorter manner.
He's taken me for a ride. He's gone round and round in circles. Yeah.
No. So I've been talking to him on and off, and without revealing anything confidential, I'm pretty hopeful that Oyo will have a very good next Diwali. Diwali aayegi agle saal, but it'll happen.
That's not better than what he answered.
No.
Diwali aayegi.
No, next year.
Next year.
Next Diwali.
Okay, so before we get on with our next set of questions, I want to open the floor for the audience quickly. I think we can take 2, 3. If you have any, kindly raise your hands. Sure, sir. Can we have a microphone to him? In fact, if there's one more question, we can just hear both the questions. Can we get a microphone there as well? Yeah.
My
Yes,
name
sir.
is Nikhil Kochar from the Institute of Internal Auditors. We are speaking about sustainability and cash flow and repeat customers, all very critical. Ritesh referred to governance. But when do you think is the right time for things like governance, risk, controls, internal audit, culture, for management to start looking at, for them to become relevant? Because I think if you want to create sustainable businesses, all these are integral to it. So love to have your views on this. Thank you.
I think that's a great question. I have seen personally, so first off, our company really started investing in having, I think there's a fundamental difference in having investor board members and independent board members. I think investor board members were exceptionally helpful, but I'd say 4 or 5 years since after our company got started, we really became a majority independent or a non-exec board. I think the 3 years after that, which is still 3 or 3.5 years, have been incredible. I'll tell you that, I'm sorry, I'm just counting advantages before I come to your specific answer. The ability to look at the potential risks in the business, as in which business should you be taking, which business should you not be taking. Which business is great for income but not for cash flow? Which business is great for cash flow but not so much for income? A lot of these decisions changed ever since the amount of details that our audit committee started entering in substantially improved. Second, we as a management, the responsibility from me as a leader to the broader management probably increased substantially to the management since the board and the management became directly engaged with each other. So the CFO is a direct invitee to the audit committee, CHRO to the NRC and others. So net, we've taken great advantage of it. So my answer is that knowing what I know today, I would have probably started investing in governance probably when we were a 2-year-old company in our Series A rather than now, because it doesn't take a lot of time and money to do this. All it takes is good intent. That's my view. But Sanjeev, you're really the and Kawal, you've all seen many companies. I would love to hear your thoughts.
No, so I think certainly I would even argue that there was never a wrong time. So, it's to say that now is the right time. I mean, we are almost, discounting whatever is happening. So there are 2, 3 ways to think about it. I think one is what Ritesh said is actually, I would say, industry level issue, which we need to solve for is having more independent directors. I think that's a great thought, and all of us are guilty of not investing enough on that. And the good news is that there is so much of talent of people who have been through, done that. who are interested and willing to do it. So that is the first, I think, great point. Second is that every stage that a company goes through requires different needs of governance. So we cannot paint everything with the same brush. So what we are trying to do, we are an early stage fund. We, stay with the company for pretty much their journey all the way from startup to at least some level of, maturity. We are trying to define the stages more and more so that the collective learning across companies, we can put in the system where we say, okay, these are the requirements, not just governance, around environment, around, societal issues. So the whole ESG frameworks. What can you do when a company is just starting out? There are still things you can do. What can you do when they have hit 50 crore, 100 crore revenue? What can you do at 200 crore? So if you can institutionalize this, that is probably another way of, of trying to solve for this problem, because there is no right time or wrong time to think of governance for sure. And I would just add environment and the planet issues to that, because I think we are all in deep trouble if we don't solve for that.
Okay, we can take one question and then we'll get back. Yeah.
Ritesh, I have two questions for you. One thing we have seen that the companies which have worked online and offline, they have done pretty well. Like we talked about Mamaearth, Lenskart, First Cry. So when we can see Oyo having its own hotels, that is number one. And second thing is, when is that Oyo itself will start rating its hotel on its website? So I am an avid traveler, so I follow you very closely.
When are you pivoting, Ritesh?
Thank you. No, I think the second answer is, we started it a couple of months back, where we earlier used to have ratings, but now we've added reviews also. Now we have lakhs of reviews on our platform, which allows users to make better decisions. Because I know there was a lot of, the reason why we never had reviews and ratings is because we thought, हम ही अपने ही होटल को रिव्यू रेटिंग लेंगे, अगर अच्छा स्टार दिखाया तो customers may say that, how do I trust? But I think thankfully customers do trust our reviews and ratings, it seems like. So yes, we already have it now. And on the other hand, what we've started doing is if hotels are below a certain rating, we'd actually pause them on our platform and say that, they need to improve their quality before we bring them back. The first one, look, I think it's a question. I have always learned that in India, no matter whether you're running an offline business, first of all, I agree in the offline plus online is a great opportunity in our country, that is, and also organizing it, that is going from unbranded to branded in everything is a big opportunity. And Oyo has been in some way doing that for a long time. I think specifically owning hotels has been something we've steered clear of, because we believe that our current model, we understand very well that Oyo's job is quality control, branding, delivering a great service to customers at the right price, and good individual hotel owners doing a job well. But in that, what we are focused on is more professional hoteliers. You'll find it surprising that today close to 1,000 hotel owners on Oyo in India, they were not hotel owners earlier. They came from different industry or experience, from service industry mostly, jobs, and started a hotel business. And these 1,000 plus people now run more than one hotel each. And at least 60 run 10 plus hotels. So these are very well-run operators. They all operate at 4+ ratings on our platform, 4.5+. So our hope will be making them even more successful while doing what we understand well, which is brand, quality control, pricing, and others. So those are the two thoughts. But I hope you stay with Oyo soon. We are now tens of thousands of us around the country. And please share feedback with us. Thank you.
All right, we'll take up more questions a little later. Just give me a couple of more minutes to just ask them a few questions, and I'll open the floor once again. Kamal, coming to you, we spoke about the funding winter earlier, and of course, Sanjeev doesn't believe there is a funding winter. But I want to ask you, how at Fireside Ventures are you reimagining startup financing? Any new trends in startup funding that you see emerging? Also because, and not just at Fireside, but is there really a need to kind of reimagine startup financing?
So no funding winter. I totally agree with Sanjeev.
Okay.
I think there is more money in the system today than ever was.
For companies who have their fundamentals correct.
And also, companies who are conscious of the fact that this is how they want to build it. See, the thing is that we are early stage investors. So a lot of the time we are taking a bet on the founder even before the business. So if you are meeting the right set of entrepreneurs who have the right set of mindset of what they want to build, that is good enough for us. So I'm saying it's not always that you have data and you have all the information, but it's the mindset and how you're trying to think of it, which is important. Now, if somebody comes and tells me I'm going to build a unicorn in 2 years and then I want to exit, I will not invest in that. no matter how good the idea is. Now, how do you reimagine the investing environment? Like I said, it's courses for horses or horses for courses.
Okay.
I would not write a big check. No, we have raised funds, we are growing larger in terms of fund size, but our thesis does not change. The first check has to be enough so that the bootstrap mindset, the desire to, like Sanjeev said, that $2 million should be seen as gold.
Yes.
And 2 million, in fact, the first thing I did after I left Helion and started Fireside is stop talking $1 million. I said, let's talk rupees lakhs, not even rupees crores. Because the mindset has to be of an entrepreneur and not of a VC running a business which has got an entrepreneur to front end.
Absolutely. Yes.
So it's not something which has changed, but I think it's good that at an industry level we are starting to see that thing. So check sizes becoming smaller is good. Is not necessarily a bad thing.
Yes, okay. So we are seeing check sizes
I'll
getting
just
smaller. Yeah.
Add to that. See, entrepreneurs and companies that get too much money too soon, too easily, tend to spend it suboptimally.
Yes.
Paisa should always be a little tight. That's when you spend it wisely.
Absolutely. And Sanjeev, my next question is to you. As an investor, as a corporate leader, and as someone who sits across the government while they are, charting out plans for the startup ecosystem, tell me what, according to you, what policies have moved the startups ecosystem and where do we need to work harder?
So, look, I think for the first time, this government, I think 5 or 6 years ago, is the first government in independent India that recognized the importance of startups officially. So if I look back to when I began my career, I finished college in '84 and I joined my first job. To now, it's been 38 years. Sea change in business, industry, economy, everything. But if you look at where the growth, investment, employment growth, all that has come from, it's come from companies and industries that did not exist in 1984.
Yes.
IT services did not exist or barely existed. IT-enabled services did not exist. Internet did not exist. Mobile telephony did not exist. Private insurance companies did not exist. Private sector banks did not exist. Private airlines did not exist. You can go on. Now, if you're dealing, and if you look at mature companies, you look at people who were mature then and are still mature, let's say a SAIL or a Tata Steel, I haven't researched thoroughly, but I'm willing to bet the headcount has not increased much. It may have even reduced. Because when companies mature, industries mature, you get into consolidation, efficiency, automation. Right? So if India has got 1.4 billion people and you're looking to create jobs, ये jobs, नई industry, नए initiatives, नई companies से आएंगी, which means 60 or 70% of them will be startups by first generation entrepreneurs. TCS was a startup,
Yes.
but by an established business house. Right? And so on. But HCL, Infosys were startups by first generation entrepreneurs. So Infosys and HCL were startups in 1980 or 82. And look where they are today. So tomorrow's giants will be startups of today. Right? And this government recognized that and therefore gives startups huge importance, and Startup India came about. As a part of Startup India, the government started a fund of funds.
Yes.
Under management of Sidby. And I was on the investment committee for the first couple of years, and I have been through it myself, right? I think the government recognized that you need Indian risk capital, right? 90% of risk capital, or perhaps even more, Kanwal, is from overseas. You need domestic pools of capital to invest in startups.
Yes.
And I think this government recognized that and started a fund of funds. I think that was a huge impetus.
And that has increased. Yes.
Yes. Okay, so many more AIFs have come up. Many more domestic investors. People are now recognizing this as an asset class. I think Indian investors have come up. These are all good things, right? What perhaps the government could do more is continue to cut the red tape for startups and for investors. Kanwal, I think you want to say something on this.
So I think I would break it into two parts. One is that encouraging and being conscientious and conscious of the whole opportunity for startups and what it means for things like job creation and overall economic growth. I think that part I have seen tremendous growth in the government and at every level. I think the interesting challenge is, and we talked about it in our CIA, startup council, is how do you ensure that this money can reach into small town India, into entrepreneurship, which is not necessarily either VC funded or VC fundable, or not even should not be VC funded? So there is that other universe where there are thousands of entrepreneurs who are great guys. We talked about people who are, not even being in the hotel industry, starting things. There are so many examples, franchises, people willing to set up small shops. Is there a different mechanism to address that?
Okay.
And that I feel is where there is a next level of opportunity, because funds will only do 1% of every deal they say.
Yeah.
So what happens to the other 99, which are all legitimate potential cases for investment?
So let's ask the founder, Ritesh, your thoughts on what they just said. What has worked for founders? Where more work needs to be done?
So I think first off, I'm very lucky that we started our company 2013. So we've not seen challenges
that
of
Sanjeev
back
was
in the
talking
day.
about,
I
yes.
think when we started, IT services was a segment that was already mature. It felt like it was always there. So, but he's right. There were also startups someday which really got started and built themselves into businesses. I do want to call out what Kaval said. On rupee crores and lakhs, I think Mr. Munjal impressed this upon me, saying revenue dollars में देख लो कोई बात नहीं, पर खर्चे लाखों में देखने चाहिए. So I think that was a very critical, important takeaway for us. Look, I think for me as an entrepreneur, building in the last 7-8 years has been incredible, right? So Sanjeev mentioned about Startup India. The biggest challenge for startups, people say sometimes is capital, market, etc. I believe that the biggest challenge and opportunity is talent. And Startup India has really enabled talent, right? Today, if national TV mein log jaake startups ki baat karte hain. So that inspires families to say that, okay, our family children will go and work in startups. It's acceptable. Earlier, it used to be probably not as easy, at least even when I was starting 7-8 years back. Usse pehle to I would imagine it would be even harder. And the thing that I believe we can do more is giving more platforms like that of UPI and others, because I feel like it is underappreciated the value of national digital platforms that have been built. So for example, a lot is being talked about ONDC. I hope that becomes very popular. So more and more of those platforms I think could be value additive.
Okay. On that note, we'll just take one question. Our time's up. That, sir, has been... Yes, sir. Go ahead. Quickly.
I'm Ronish Puri from Executive Access. Question to all of you is, what is that one secret sauce that has got you where you are? Number two, what is your one advice to budding entrepreneurs? We need more people like you. And three, is there one regret that you have that you could have made it bigger?
One secret sauce, one advice, and one regret. Who wants to go first?
Okay. One secret sauce is persistence. One advice is same as the secret sauce, lage raho. One regret, we didn't invest in Ritesh's company.
Well, you have time. When is your next round coming up, Ritesh?
Sanjeev ji is very generous. I think I'd say that the one secret sauce is just hard work. I'd say that consistent hard work for long periods of time. I would say, regret, I would say is, I wouldn't say regret, but I'd say one of the learnings is that, I think I should have probably started even earlier. I started at 19. I wish I would have started even earlier than that.
Well.
So listen, I must elaborate on the last one. So
Campus
I was advised by a friend, there's this young fellow who's 19 years old. He's running a company called Oravel. And he didn't go to college, and he just began the company. And I didn't even meet him, I didn't reach out. And I said, yaar, 19 saal ka... and I just didn't follow up. Okay, so that's how we didn't invest in this company. Yeah.
All right. So he's led the way for more 19-year-olds to get funded. Kaval, quickly.
Yeah, sure. So I think the magic pill. My mantra has always been that as an investor, we are kingmakers and never kings. So as long as you believe that entrepreneur is the real hero and you are always supporting them rather than almost, trying to take over and run their business. And in fact, we've changed it now to, queen makers and not even king makers. Unfortunately, don't see enough women in this room, which is a regret. regret for me is that I really thought I could be a good entrepreneur, and I have two very successful entrepreneurs sitting here. So it was always deep down desire that I wanted to start something of my own as a business, and ended up being an investor, which is second best in my mind, but still something that I have enjoyed. What was the third question? Sorry.
So regret, secret sauce, and one advice.
So advice is, I think Lagero was a great advice from Sanjeev. I would say build a business for yourself, not for the investor. I think whatever you're doing, it has to be your passion, it has to be your desire and your belief in what you're doing. Investors will come, investors will go, and that is to me the biggest learning. If the investor starts becoming the operator, then that fine line gets very badly disturbed. So if you're passionate about something as an entrepreneur, you're doing it for yourself or whatever you believe in, and not for something that you're trying to do it. Because in a lot of times we hear pitches where people come and tell you what you want to hear, and I think that is the biggest mistake, because if you don't believe in it, anyway not going to happen. So you're fooling both sides.
Sure. We would have loved to take more questions, but we've completely run out of time. Would love to thank my panelists for such great insights. Like Sanjeev said, paisa banao, paisa badao. Kaval said, get your house in order, stick to the fundamentals. And Ritesh said, resilience is key, corporate governance is key, to keep afloat in these tough times. Many thanks, gentlemen, for joining us. Thank you for being such a wonderful audience. Thank you.
Thank you. I would request you to please be seated. Inspired by this fabulous session, we have an audience question where they'll be voting and we'll be taking a poll. Can we have the question, please? And of course, there you see how to use the vote pad. If you've already seen CE, you press, long press on A, B, C, you clock in your option, and then on the right top, we have a green button to press OK. So can we have the question, please, now? The world is in danger of facing a bust similar to the dot-com experience of the early 2000s. A, agree, B, disagree, and C, can't say. So there's a live polling that is going on. Fluctuations are still going on. 5, 4, 3, 2, 1. Okay, so now this is logged. So B, 68.75% disagree with this. With that being said, let's have a huge round of applause for this fabulous session. Would request Mr. Inderjeet Kamotra ji to kindly come on stage, the CEO interim from Unity family, to kindly present the mementos to our esteemed group of panelists. A big thank you to all our panelists. Okay, with that being said, ladies and gentlemen, we are moving on for lunch. It's a 50-minute lunch. So request you all to please join us for lunch hosted by Unity Group and Veka. Apne remote